What's up everybody, this is Jack from Crypto49er, bringing you my knowledge in cryptocurrency. So today I want to talk about tracking risk and more, and I'll explain that in a bit. But before I do, just want to remind you guys that I'm giving away $5 in Litecoin or $10 on Cryptobridge, and I do that giveaway every Friday. But in order to win, you have to answer a trivia question in Wednesday's video. And this week, only answers to my Instagram post of Wednesday's video will be accepted for the giveaway. Yes, I know, I haven't been posting on Instagram on a regular basis. I'll definitely at least do that for this week and hopefully be able to do that going forward. But anyway, good luck everybody. And on to today's topic, tracking risk and more. So I'm really still going through Philicon's 24 cryptocurrency tutorials, and I am actually covering multiple lessons in this one video just because these 3 lessons are relatively short. So it's really starting off with lesson 14, using a basic Excel tracker for risk management. Lesson 15, how to set up automatic stop sell and stop buy executions. And lesson 16, advanced EMA strategy with timeframes and MACD part 2. So as you can see, each of these videos, this one's 20 minutes, this one's 7 minutes, and this one is 11 minutes. Add up together is less than an hour. So I was able to watch all 3 of them, and hopefully I'm able to summarize it for you guys, and you guys should probably watch the videos yourself, obviously, but this is what I learned from it. So the first one is the lesson 14, and it deals with the risk tracker spreadsheet. Philicon has a spreadsheet that he uses. I believe he has saved it out previously before he got hacked, but that link no longer works. What I ended up doing is I created my own spreadsheet based on another spreadsheet I found online. But I created my own spreadsheet. I created it on Google Sheets, and you guys can make a copy of it from for your own use. But basically, just go, once you click on that link, just click on File, make a copy, and you can do whatever you want to with the spreadsheet. So the idea of this spreadsheet is really just for you to track the risk to reward ratio, and also if you're laddering buys, because the second section here actually is if you do price averaging. If you're laddering buys, you want to price average how much you have for each coin. If you bought 2 Litecoin at $150, it'll cost you $300, and if you bought 4 more later on at a lower price, then you get, and it costs you $480. The total price is $780, and you got total 6 Litecoin, but the average price ends up to $130. So somewhere in between the two, because you end up price averaging, and this will let you know how much the average price of the Litecoin costs. Now this other section here, the long and short section, the long section really is just a way for you to document what you would normally see here on TradingView. If you do a TradingView risk-reward ratio, this is a risk-reward ratio for the long position. If you do a long position, for example, I have for Litecoin, let's say that I bought it in at $114.50. If I want to sell it at $142, if that's my target range, for example, and 55 cents, and I set a stop loss at $99.88, then you see I have a risk to reward ratio of 1.92. This basically just calculates it over here. So you do have to fill in these 3 fields. They are the most important ones: the purchase price, the target sell, and the stop loss. And then the coin is basically just the amount of coin you have. And the up and down, these 2 help you calculate what you need to sell your coin at to break even. So you do have to edit these 2 based on the exchange that you use, but otherwise it's really just these 5 fields that are in yellow that you have to edit. Otherwise everything else will be automatically calculated in the spreadsheet. So it'll tell you position size, it'll tell you the risk again. 1.9118 rounds up to 1.92, which we saw in the risk-reward ratio there. And that's basically what I calculated in here. But it gives some other information as well. So in here it tells you specifically that your max percent loss is 12%, and your max loss number is 147. So if you invested 10 coins, so your position size is $1,145. So your max loss is $147, and your max profit is $279. And then this resistance level is where you believe you see heavy resistance, where it's unlikely that it will break it, because sometimes your target sell price is lower, but then you try to capture profit before it actually hits resistance. But just in case, if the coin rockets up past your target sell price, but below your resistance level, then this is what the max profit too is. This is how much you can possibly make if it goes all the way up to the resistance level. So that's basically it with the risk management tracker. So the next thing is the automatic stop sell, stop buy. This is lesson 15. Litecoin uses Bitfinex and he has a margin trading account. In my case, I don't have Bitfinex. I don't have $15,000 to invest to actually open a Bitfinex account. But what I kind of understand what he's trying to do is basically from the video he was showing, he's able to box in a position. And what it is he's able to set up stop buys and stop sells so that he can actually walk away from his computer and be able to make profits if it hits a certain point. So for example, right here, since I don't have a margin account, I can't do the margin portion, which is put in a short position, a stop sell short position. I can still put in a stop buy position. So in this case, this is what I'm doing here. What I want to do first of all, let's say that Bitcoin right now is trading around $6,700. So if I set a stop limit buy of $7,000, if it triggers that buy in the middle of the night when I'm sleeping or if I'm away from the computer and it goes all the way up, it automatically triggers the buy. And then what I also have in place here is also a stop sell. Well, actually I set up a stop sell. It actually became just a limit sell order. So what happens is if it reached close to $8,000, then it will sell it for me. The only problem is with GDAX, you can't sell something you don't own. So not like a margin trading account, you can actually sell something that you don't own because you are short selling with margin accounts. But in my case, since I'm sure a lot of you guys are hodlers as well, and I have some Bitcoin in here, as you can see. So I was able to essentially do this. Basically, this sell position right here is actually a sell of the Bitcoin that I currently have. I'm not selling the Bitcoins I don't have right now from this stop limit buy order. So I'm selling what I have over here, but essentially the idea is only when this triggers, then eventually, hopefully, if both of these triggers in the one night, these two will kind of cancel each other and I just make a profit from this buy and sell process. And that's the basic idea of what he was trying to show in lesson 15. So now lesson 16, time frames and advanced 55-day EMA part 2. So in this lesson, he's kind of going over again some of the things he covered previously, advanced 55-day EMA strategy and the time frames. But the idea is, if in the 5-minute chart BTC is bearish, can this 5-minute time frame ride up to a bearish trend on a 15-minute chart? So you just want to go from a very low time frame, like 5 minutes, for example, and look for a trend there. So in this case, you see a bearish trend, and now you would go up to a higher time frame, like a 15-minute time frame, and just see, hey, is this trend following through? And the next thing is, in the 15-minute chart, can the bearish trend ride up to an hour time frame, and just keep on going up and up? So in this case here, let's just go back to the 5-minute time frame, for example. The 55-day EMA is above everything else. You can see that in a higher time frame, it only became bearish today because as of yesterday, it was still pretty bullish. I think mainly because all the other news that we have been hearing recently, like the $1 billion blockchain fund in China and the Rothschild, a lot of institutional investors like the Rothschild Investment Corporation becomes Bitcoin stakeholder. Technically, this is just a confirmation that the Rothschilds investment have been investing into Bitcoin. This is somewhat old news, but the other thing was George Soros investing into cryptocurrency and the Rockefellers also investing into cryptocurrency. I think this is the reason why Bitcoin was going up the last few days, but I guess those things just doesn't have enough effect to keep Bitcoin staying up. And now we have went back down again. But you can see that the trend was a bearish trend, and everything is a bearish trend still. So you could see that even in the hour chart, it's still bearish trend. And you can even go to the daily. We're definitely in the bearish trend in the daily, I'm sure of it. So this is how you basically use the low time frame to the high time frame to confirm a particular trend. The idea is if we can confirm on a higher time frame, we can assume an overall bigger trend has happened. The other thing with the 55-day trading strategy is, as he said, is use MACD histogram and RSI bearish divergence to confirm 55-day EMA and short. And he also said go from low to high time frame to confirm the trend. My understanding with margin trading and shorting is that there's a 28-day maximum financing period, so you can only open a short position for 28 days in the United States, at least with Kraken anyway. This is from Kraken. So if you go to the daily chart, for example, Bitcoin has been bearish for a while, since January. For people that really want to hold a position, at least in the United States, I don't think you can. But since I don't have a margin account, I don't know how that works. So I really do want to know how that works for short position for people that have margin accounts. That'll be good to know. Anyway, that's my video for today, guys. Let me know what you guys think. Leave a comment down below. As always, I appreciate you guys for hitting the like button and hitting the subscribe button if you're new to my channel. If it isn't crypto, it isn't worth mining, it isn't worth speculating. I'll see you guys tomorrow. Peace out.